Good morning, ASEAN. Freshen up your world, your thought, and your idea with us every weekday from 7:30 to 8 a.m. I'm Patsurang Desha Putharangsi.
And I'm Weena Jongprasid. It's Wednesday, the 22nd of May. Our top story today is on the Philippines.
Concerning the South China Sea dispute, the increasingly bitter maritime conflict with Taiwan has somehow resulted in a very, I would say, having a hidden agenda approach. As you know, analysis before has stated once that the Philippines often regards Taiwan as a province to China.
And so regarding this news is about a military upgrade.
As set against China and regarded as bullies.
This military upgrade is $1.8 billion US, and according to Philippine President Benigno Aquino, he referred in pretty much disguised comments that his bullies are China. He has vowed that the armed forces would be given the resources necessary to protect the Philippine sovereignty. And Aquino told naval chiefs that we have a clear message to the world. The Philippines is for Filipinos, and we have the capability to resist bullies entering our backyard. Aquino detailed a 75 billion peso or a $1.82 billion US military modernization program that gives priority to upgrading the Navy, which is one of the weakest in Southeast Asia. And he also said that by 2017, the Philippines would acquire 2 new frigates, 2 helicopters capable of anti-submarine warfare, 3 fast vessels for coastal patrols, and 8 amphibious assault vehicles. He said that the country will improve its communications, intelligence, and surveillance systems. Aquino said the government has already spent 28 billion pesos on military modernization over the past 3 years.
Moving on to what's going on in Thailand right now. At the ministry's meeting yesterday, 65 Thai councillors posted overseas private sector representatives and the Bank of Thailand. What a consensus was that the baht strength and sluggish global trading would make it more difficult for the exports. Commerce Minister Bunsong Therayapirom, who chaired the meeting, announced a revision to the growth forecast for exports to 7 to 7.5% this year, to between 245 billion to 246 billion US, down from the previous projection of 8 to 9%. But shipments to China, Latin America, and South Korea have been hit the hardest by the baht's appreciation. Representatives of the private sector questioned the government's plan to tame the baht after the Bank of Thailand proposed 4 measures to curb its rise, but no concrete action has been taken yet. So one of the representatives said that the measures that have been announced should slow down capital inflows and weaken the baht. Printing more money to purchase bonds might be another possibility. According to a deputy governor of the central bank, Pong Penrung Virya, said exchange rate management could take several forms. However, it should be balanced and look at the impact in the medium to long run. The central bank needs to ensure a stable currency to balance both imports and exports. Or the baht has the tendency to move up in the short term. It will be difficult to intervene. The BOT understands that the private sector does not want to see the baht at 28 to 28.5 against the US dollar in the short term. However, the baht has reflected strong economic growth, and the government could stimulate more investment by the private sector. And she added that the 2013 export growth forecast for example, for Myanmar is projected to grow by 45% this year, up from 30%, while shipments to ASEAN will advance by 5% each, according to the ministry's forecast.
We could see a high-speed railway materialize between among Thailand, Laos, and China after the Thai cabinet met with its Laos counterpart in Chiang Mai earlier this week. Well, the proposal would have a major impact on the region, as there is currently only vehicle crossing from ASEAN countries into China. Both governments are planning to spend billions on countrywide railroad infrastructure. But in Laos, the plan will be nothing short of radical, as the country's rail networks are practically non-existent. The proposed massive rail projects will require loans totaling over half of the country's GDP, which was $8.3 billion in 2011, according to the World Bank. Well, Vientiane's ambition to transform the landlocked country into an integrated regional player is gaining support from its neighbors. Last year, the Thai government agreed to finance a $55 million project to build a short railway line bridging Laos capital with Thailand's Nong Khai province, while it plans its own railway overhaul to be completed in 2020 at a cost of $69 billion.
Myawaddy checkpoint at Myanmar-Thailand border is facing warehouse shortages and cannot adequately provide temporary storage from the imported goods from Thailand as the border trade is booming too quickly. Well, local merchants said import from Thailand through Myawaddy checkpoint has been increasing as the route offers shorter transit into Myanmar. Traders, including those newly arrived from Yangon and Mandalay cities, have crowded to trade through Myawaddy checkpoint. Those merchants who imported from Thailand through Kwang Tung and Yongnon border checkpoints have also returned to Myawaddy since it opened again after a 17-month temporary closure. The warehouse demand for the goods rose significantly. Meanwhile, warehouse capacity at Myawaddy meets only exports demands, but it is far below the requirements of importers who trade through the checkpoint. A merchant explained also that traders are transferring goods directly from truck to truck as there's no space to store goods temporarily. He added, the arrangement usually goes wrong when they find difficulties to hire trucks at their sites. It's really troublesome that they cannot hire a warehouse, so they cannot afford to buy a warehouse as it is too expensive. If the government allows more land for a warehouse, about 30 companies will buy. Myawaddy border region was a restive area and the checkpoint was on and off. As no prediction could be made, the traders did not do any systematic preparation for their business. So now they are facing warehouse problems. But then an official from the checkpoint encouraged the merchants to behave like a professional who is decent and ethical in their business without just looking at the profits they make.
Myanmar Focus Daily today will bring you the first series of Myanmar urban development, and today's series is on the master plan. Let's take a look.
Currently, there are around 5 million people living in the former capital city of Yangon. With more foreign investment coming into the country, it will attract more people into the city. But how Myanmar will prepare for the urbanization that come with the development of the country? Let's go find out at Myanmar Urban Development Conference 2013.
At the conference, experts from various fields related to urban development shared their views on how Myanmar should plan for urban development and address challenges and issues that Myanmar would face during the period of transformation into urbanization after the lack of investment in urban planning for decades. Myanmar's population is around 56 million. According to the statistics given at the conference, 3 out of 10 people here live in urban area. The Asian Development Bank projected that by 2050, 62.9% of the population in Myanmar will be living in urbanization, while the figure of Thailand is only around 60%. Currently, major cities such as Yangon and Mandalay have around 5 million people for the former and 1 million people for the latter. These two cities have been identified as two major growth poles. An expert from the conference, former president of the International Society of City and Regional Planners, pointed that the sole concept of urban planning should be the person, not the cars.
The problem that we have in cities is that they change from the scale of human scale to the scale of cars. The cities were designed for the benefit of the cars, not for the people. So what is now happening, this transition in urban planning that is happening around the world, is that planners are returning to understand that what is important is the person and not the car. So that sole concept is changing the whole view of urban planning, and I think that in Myanmar that is very important because they still having the human scale within the structure of the city, and you can walk and move around without need of a car.
In developing major cities, Myanmar puts a focus on people-centered approach and rural development and poverty mitigation.
And also our urbanization policy is for development of the cities and also aiming at the establishment of the integrated, sustainable and resilient urban network systems that I think I already mentioned in my speech. And that will also, we will also emphasize on balanced development and sustainable allocation of investment and financial resources.
For Myanmar, the concept of concentrated and decentralization development strategy is the two-polar development concept which are Yangon and Mandalay. Myanmar will transform these two cities into national economic growth center with a spatial economic zone, ports, international airports, trading and financial hub. For the capital city, Naypyidaw will be the city of administration, transport and logistic hub. There will also be secondary regional growth center in larger cities throughout the country. Experts also suggested that Myanmar should not forget to preserve its own identity, which is the existing colonial buildings. More details will be in the next episode of Myanmar Focus Daily Myanmar Urban Development Series. On the way, Tami Sang reporting from Yangon.
Starbucks' first store's revenue in Ho Chi Minh City, Vietnam exceed target. Coming back for more story.
It's been more than a year now that Singapore's DBS has launched its bid to make the biggest ever bank acquisition in Indonesia. But just yesterday, Indonesia has approved the purchase of Singapore's DBS of 40% stake in Bank DANAMON, but demanded that the city-state open up its financial sector before any full takeover. Central Bank Governor Dharmin Nasution said it could acquire part of DANAMON but could not yet take a controlling stake. We will not give them more unless there is some reciprocity, he said, referring to demands that Singapore give Indonesian banks access to its markets in return for the deal. A spokesman for Singapore's central bank said the city-state and Indonesia were exploring further access into each other's markets. The approval was in line with new bank rules brought in several months after DBS launched its takeover bid that limit bank purchases to 40% initially and allow full takeovers only later. DBS will now have to undergo 3 financial health checks before a full takeover can be approved, which will take 18 months. It is seeking to buy the controlling stake from Fullerton Financial Holdings, owned by Singapore's Temasek Holdings. The deal was launched in April last year but stopped in its tracks when the Indonesian Central Bank announced the new rules to replace some of the loosest in Asia. It came after the takeover bid sparked vocal opposition, including from lawmakers who demanded that Singapore admit Indonesia's fast-growing banks. The outcry echoed nationalism seen in other sectors, such as mining, which has been growing as Indonesia's economy booms and which has made investors more nervous about entering an already difficult business environment. Other foreign banks have been watching with interest to see how the DBS DANAMON deal works out, with many waiting in the wings to move into untapped market where millions still lack bank accounts. Indonesia's state-owned Bank Mandiri, Bank Negara Indonesia, and Bank Rakyat Indonesia are all hoping to enter the Singapore market, said central bank spokesman Divi Johansia. Indonesia's population of 240 million and its booming middle class have made it a key target for foreign banks, particularly since much of the global economy remains in the doldrums.
Well, could we now how challenging it is for Starbucks to actually set up their own coffee store in one of the biggest coffee producers in the world, in Vietnam.
Yes.
Well, but Starbucks CEO Howard Schultz says revenues from the company's first store in Ho Chi Minh City exceed the target, surpassing expectations, although it has experienced a number of challenges to attract local customers. Well, the Wall Street Journal said Vietnam has its own deep-rooted coffee culture that could prove challenging to the Seattle-based coffee chain. Since its two-story store opened in Ho Chi Minh City back in February, Starbucks sales at the new location are exceeding predictions. According to the CEO, Howard Schultz, he actually did not provide specific sales figures. Well, the company decorated its downtown store with local art and artifacts to create a distinctly Vietnamese atmosphere. It also came up with a new drink, the Asian Dolce Latte, to appeal to local palates. And it serves roast duck wraps and French-style baguettes. But one of the customers, Nguyen Van Minh, he said that if Starbucks wants to succeed in Vietnam, they have to change the way they serve. Because some said that Starbucks should actually use drip filters perched on top of glass mugs, the way the Vietnamese does. Well, the local coffee entrepreneurs such as Trong Nguyen, the Central Highland Coffee brand CEO, Dang Leng Nguyen Vu, seem confident that local drinkers will stick with Vietnamese coffee, which is available everywhere from nearly 1,000 Trong Nguyen brand outlets, as well as glamorous cafes and small pavement shops. However, the CEO said Starbucks sells more than just coffee. It sells environment, it sells store design, it sells experience, it sells value being added up to occupy a much different position than anyone else in Vietnam. Well, actually, Starbucks' move into Vietnam reflects its continuing efforts to venture into far-flung regions, while core markets such as in the US and Europe remain relatively weak. And actually, Vietnam's coffee culture dates back to the 19th century, and the country is also taking the lead in coffee production, with its Weasel coffee selling for as much as $500 per kilo in London and New York. Oh, talking about crisis energy in Thailand, Khun Veena.
Yes.
Yeah, it just occurred last night when there was blackout in many provinces in southern Thailand.
Yes, and in our Asean Go Green report today, we'll bring you to an interview to see the importance of renewable energy, as Thailand is also hoping to become an eco-friendly country in 10 years.
Swadika, this is Asean Go Green, a program that will open up your horizons towards a greener perspective. Now, while the energy resources around the world are declining, and at the same time, there is also high demand for energy consumption every day. And joining the world trend and realizing the problem, Thailand is now going ahead to build more renewable energy in 10 years' times.
Whether to be crude oil, electricity, coal, Thailand recognizes that it needs to have measures to reduce the reliance from being an exporter country. Within 10 to 20 years of time frame, the country aims to decrease on importation by increasing its own shares of renewable energy sources.
Well, the primarily renewable energy target would be biofuels that include ethanol and biodiesel, as well as renewable energy sources to produce electricity that would include solar and wind, hydropower, biomass, biogas, and municipal waste. And Thailand is one of the very first Asian countries that has a long-term plan that set a target to increase the renewable energy consumption in our country from less than 1% a few years ago to be at least 25% by 2021. The biggest challenges right now, I believe that it involves with the technology. We need to incubate our entrepreneur and investor who would like to invent and innovate certain types of technology that can produce electricity or energy form that we can consume by using renewable energy sources. For example, we are quite advanced in biomass and biogas technology. There are some private sector that could produce a certain technology that could transform agricultural waste into biogas or electricity. And this kind of technology is much needed when we promote the renewable energy as a package.
Since renewable energy is mainly a domestic issue, Thailand so far is considered as the leading country in ASEAN when it comes to renewable energy. The country is pushing forward to become a low-carbon society in the future.
Stated in the 11th National Economic and Social Development Plan, and we are focusing on both renewable energy developments as well as promotion of energy-saving technology. In terms of comparing with 10 ASEAN countries, we do believe that we are number one in promoting the renewable energy format. I do believe that there are certain countries that probably has a better or more potential, but when you couple that potential with the policy to invest, Thailand emerged to be number one. So I do believe that each ASEAN country has the idea of what is their priority to promote their own technology. But Thailand has quite a unique position because we are agriculture-based economy. So the technology that could turn agriculture waste or agriculture products into energy, either electricity or biofuels, is probably a core competency of Thailand right now. Longer term, I do believe that the price of renewable energy would be as competitive as the price that come from fossil fuel-based energy, because in the fossil fuel energy, either natural gas or oil, the trend of the prices are increasing. But some certain renewable energy technology, the cost of those technology, there are some trend that showing the downward or decreasing trend of those costs.
Despite the drive for a greener living, Thailand still needs most of its natural gas supply from its neighboring countries. So the renewable energy bid by the Energy Ministry is the hope for Thailand to lessen its importation of power energy from its neighboring countries.
That's it for Good Morning ASEAN today. We'll see you again same time, same place, same channel.
Catch us again 7:30 to 8 a.m. on กรุงเทพธุรกิจทีวี I'm Veena Tumbaksik.
And I'm พัชจุรังเดชาพุทธรังสีสวัสดีค่ะ
สวัสดีค่ะ